following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
We got Carlos from California. Carlos, what's happening?
How you doing, Tom?
I'm doing great,
How
man.
are you?
Yourself?
Oh, very well, thank you.
That's awesome,
Thank
man.
you very much. Can I make a comment real quick?
Absolutely.
For me, it's a real challenge every time I'm doing a trade. And thanks to your help, I've been able to done a lot of things as far as trading. And I know there's a lot of Hispanic people who's listening, and they think this is a lot harder than it looks. But with your help, it's been a lot easier to make things sound very simple.
That's a beautiful thing, man. Well, listen, we appreciate it. We appreciate it.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Manifest your true intentions. Regardless of what language you speak, your intent will manifest through the word. What you dream, what you feel, and what you really are will be manifested through what you say each and every day. Market-wise, let's take a look at it out here. We have the Dow Industrials up 103, NASDAQ up 37, S&P's up 16, gold contract up $15.50, trading at $1,333 an ounce. Silver up 55 cents, $19.83 an ounce. Platinum up 20 bucks, $1,049 an ounce. Light sweet crude up $1.31, trading at $45.36 a barrel. Bonds, you have the 10-year up 2 ticks, 130.18. 30-year up 18 ticks, 166.18. King dollar down 320 ticks, trading at 95.65. The euro is at $1.11, and the yen is at 100.59. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You have the Fed announcement. Bottom line, they're not going to do anything. They say that there's still a chance that they're going to go up at the end of the year. What have we done market-wise? So you had your SPY trade up to $215.22. Your high, which was established last week, is up there at $215.78. Bottom line, hasn't been able to get into that. We're at $215. What I expect you're going to see here, folks, the volatility is going to continue. And the SPYs, the number to keep your eye on is 214.88. You close under 214.88, and that's really bearish. The reason being, folks, that was just the high of Monday. And if that can't even hold the high of Monday, get out of the way. NDX 100. Now, the NDX 100, this is what's really cool right here, is that the NDX right now tested the high and right to the penny, right to the exact penny. 4841.75 was the high that was generated out here. Wasn't it? Let's see. Yeah, exact number. So in the futures, folks, it tested it right to the exact number. We'll see whether it's going to back off. It did back off. It always blows my mind, though, when you're testing it right. The NASDAQ futures trade in the quarter point. And bottom line, it hit it right to the quarter point, which is just amazing. So we'll see where this shakes out. What it has also done is that if I take a look at these and we put these, bring these in a little bit closer, what you're going to see is that the right there is where you could actually close. We could close at 48.31, and we actually could get down to 48. Is that 25? Yeah, 48.25. So bottom line is that we'll see if, in fact, the NASDAQ can hold those prices. Gold contract. What do we have with gold? Gold contract out here traded down to 13.10. Right now you're at 13.39. You have wide price spread. You have the volume behind the move. And we'll see if, in fact, this baby can hold the... We're over the 13.3250 right now. And that was last week. Last week we got up to 13.3250. You had the wide price spread, you had the volume, and it gave it up. This is going to be important right here if, in fact, that's where you're going to give it up. And the reason being is this. If you go to the XAU, the HUI, what is happening is that both are going right into two separate areas where you have volume. And we had volume on the way down on the XAU on the 24th of August. That price point, the high of that is 102, the low was 94, as well as on the September 9th. The high of that was 98.01, the low was 98.89. So the 98 level inside the XAU is important, as is we go over to the Gold Bugs Index. Gold Bugs Index right now is trading up $13.34. The numbers to keep your eye on the Gold Bugs Index is that when we came down on the 24th, it came down from 252 to 236. And then we had gap down from the price point of 241.53. So those numbers are going to be important as we come into this close out here today. Bonds. Let's go into the bond market. The bonds, bottom line, folks, are still saying, guess what? Yellen and the crowd's not going to raise the rates. The percentage that the rate will go up on the December meeting is still basically 60%. Bottom line is that the market itself looks like it still wants to raise the rate. What we've had out here today is that you've done 1 million contracts thus far. We hit a low out here today of 130.02. You're at 130.19. We'll see whether it can get up to the 130.27, which is quite a way up for the 10-year. But you get volume up there, and you're actually going into that level, and you're going into that level with lighter volume. We go take a look at the 30-year. What we have with the 30-year is this. 30-year has 241,000 contracts, and you're at breaking 312. So you can make the case that the 30-year is actually, it has volume, but it's actually rejecting these lows out here. So the 30-year is really saying that, okay, now can it make it up over the 167.18? And we'll see if in fact it can. King dollar. Let's go over and take a look at King dollar. What we have with King dollar is this. Now, this is the cool thing. So, well, there's a lot of cool things out here today. It's just pretty amazing, the volatility. But we knew the volatility was going to be out here. So, King dollar, folks, has done this. Last night, you had the Bank of Japan come out. They, basically are going to try to move the long end of their yield curve. That threw huge volatility into the yen, into the dollar, into the metals, into the Nikkei. The dollar last night traded as high as the 96.30. Well, now what you have is this. You got into, over, and you're pushing the swing points, the swing point highs, these are, with volume. Because you didn't break down. Even intraday today, with the Fed not doing anything, the dollar index only got down to 95.32. The dollar index would have to get to at least the lows that were established here on Friday, which would be 95.15. Bottom line, it didn't. So what is that saying? That's saying that pushing the highs with volume, that's saying that, guess what? Dollar still wants higher price. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials right now are up 120. You get the NASDAQ up 43. S&Ps are up 19. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is up 129. You get the Nasdaq up 46. S&Ps are up 20, and they're getting some juice into this market, folks. Let's see. So percentage-wise, this is what we have happening coming into, we get 45 minutes. Right now, you have the Dow up 0.7%, Nasdaq's up 0.8, S&Ps are up 0.6. If we go into the Dow Industrials and take a look at the strength versus the weakness, this is what you have. Strength in the Dow Industrials, there's only 3 stocks that are in the negative. Procter & Gamble is down 1.5%, Disney's off 0.6, Apple's down, Apple's flat. The leader out here is Boeing, that's up 1.8%, or $2.32. Chevron's up 1.6%. Caterpillar is up 1.6%, and you have United Technologies up 1.5%. Inside the NDX 100, NDX 100 right now is up 41 bucks. Adobe's the leader out here. That's up 6.7%, or $6.74. You have Baidu up 4.7%. Micron Tech is up 4.2%, and Autodesk is up 3.7%. Taken away from it is that you have Netflix down 3.4%. American Airlines is off 1.8%. Alexa Pharmaceutical is down 0.9%. Let's go over and we take a look at the 3Qs. 3Qs right now trading at a price point of $118.03. Your high out here is $118.12. We've hit, and this is just crazy when this happens, we've hit $118.12, right to the penny, too. It's like, you gotta be kidding me. You know, how does this work, okay? You know, how does it get right up to that level? And, you know, bottom line is that it tests the level, and, you know, we'll see how we come into the close here. Now, the NDX has tested these highs, folks, 4 separate times. The last time that we tested them, we gave it up. It was on Monday. Bottom line, you gave it up on Monday. So, you know, we'll see whether this holds coming into the close. The market in general here, I got to find this article because this article is pretty intense. You talk about insider trading, folks, getting grabbed on insider trading, and just it actually, it's just pretty amazing, man. And what it is, it's a large hedge fund that I'm sure you've seen this guy. If you watch CNBC at all, he seems to be on. He was on quite a bit. He'll still be on, but the trade's pretty amazing. Okay, so this guy Leon Cooperman, who has been accused of insider trading by U.S. regulators is the government's highest profile case since the hedge fund manager SAC Capital Advisors. Now, they never got, bottom line is that that's SAC. Well, they got a few guys in SAC, but they didn't get Steve Cohen, who runs it. Now, Cooperman, they're specifically right after him right away, but wait till you see, if this is the article, now this guy has $5.4 billion in assets, has been, okay, so this is what's really bizarre. The regulator is saying that he earned $4 million on this insider trading deal, and it was in 2010. So we're 2016. Takes, number one, 6 years to come to it. But wait till you see the trade, because they have the trades in here, folks. And this is, what blows my mind in this particular case is how this came down and thinking that you may get away from it, okay? So Cooperman's firm, with $5.4 billion in assets under management as of August 31st, is among the oldest in the industry. He built a reputation as a stock picker for over a half a century by scrutinizing undervalued companies and asking management tough questions. He previously headed the Goldman Sachs Asset Management and worked at the Wall Street firm for 25 years before leaving in 1991. Like other hedge fund managers accused of wrongdoing, he could now be fighting for his firm's survival and his legacy. Cooperman said in a letter Wednesday to investors that he strongly disagreed with the SEC's allegations that the firm hasn't engaged in any unlawful conduct. I think this is the one. I got to find you the article. There's an article in here, folks, with the trades. And what he did, let me find this article, because it's a really, they have the actual trades. And what he did, which it seems that someone that's in the market for a long period of time would never do, is that he went in the option market. Here it is right here. I got them. Okay, so he went in the option market, and he bought, I think, 1,900 options on an option that never trades. Okay, so here it is. If you're watching Tiger TV, here it is. The SEC considers that Cooperman received a tip from an executive at Atlas Pipeline Partners in 2010 that the company was planning to sell its Elk City, Oklahoma operating facilities, a big asset sale that pushed the company's shares up 31% after it was announced. The tip prompted the 73-year-old investor to load up on shares, call options, and debt of Atlas Pipeline for various funds associated with this firm. According to the SEC complaint, Cooperman made $4 million. But wait till you see what happens. This is crazy. The first batch of call options, which were granted the right to buy shares at $15 by August 21st of that year, did not trade frequently. But when Cooperman started buying them after receiving the tip, the SEC narrative, if the SEC's narrative is correct, the trades are easy to spot. The contract, each of which conveyed the right to buy 100 shares, traded for 5 cents on July 7th and 10 cents on July 13th. The prices of the contract spiked after the asset sale was announced, trading as high as $3.20. The thing that's amazing, folks, is that there's a million different ways that you can try to hide these. The easiest place to get caught, that folks continue to seem to get caught over and over again, is on the aspect that when they go in the option market, they go in the option market and they pick an option that no one's traded. There's no liquidity in them. And if you're just looking at that graph, he was 90% of all the options in the market. Bottom line, what's going to be intriguing here is that these cases take a long period of time. But he's got billions of dollars. But guess what? They like putting guys away that are big, once they can get their mitts around them. And because they didn't get their mitts around Steve Cohen, I'm sure that there's going to be some push to shove in this whole ball of wax out here. We go take a look at some of the volume out here. Let's see what we have. This is what we have. You're still going to have a light volume in the NYSE. Right now we're at the 580 million. That's going to come in maybe about 800 million. We go take a look at the NASDAQ Composite. NASDAQ Composite right now is at 1.5 billion, so that will come in at about 2 billion. If we look at the composite, The composite right now is, the high of the composite is 50, right at it. This is going to be cool coming into this close. So we're at 52.87.61. And we've hit 52.33, no, 52.89. And right now we're right at the highs. You know, so bottom line is that this is going to be a big close for the NASDAQ composite, because the NASDAQ composite in itself can bring the market up, can bring the market down. If you get another failure inside the composite, that's going to be a big number. Dow Industrial's bottom line, the Dow Industrial is still quite a way off its high. You know, the Dow's up 126, but we're only at 18,256, where the highs are about $400 to $500 higher than that. You stay right there, folks. We're coming right back. Our phone number is 877-927-6648. Dow Industrials right now up $120. You get the NASDAQ up 45. S&Ps are up 19. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow right now is up 128. We get the NASDAQ up 45. S&Ps are up 20. And I believe one of the Tigers just told me that Yellen has just exited the stage left. So now we get a half hour. We'll see where this market wants to go after that press conference out there. And, bottom line is that let's go take a look at the SPY first, the SPY. SPY right now is trading at a price point of 215.46. And, you're going into that, the 215.73. And as well as 215.14. You know, if it holds right here, you know, that's saying that, yeah, I can get up to this 215.73. That's the way that would shake out. NDX 100, let's take a look at the three Qs. Three Qs right now are at $118.18. That high that it's going after is $118.12, which is already hit, by the way. The number for the QQQ, a close under 117.81, would be that'd be a failure on price and volume. And what that is, that was the high of last week, folks. Where last week there's no doubt you was pushing into that high, pushing it with volume. Now this is what's going to be really wild, is that last week on the 15th, so September 15th, it had every right to bust higher. It had the volume behind the move. We don't have the volume behind the move today. What you have is this: you're trading at $118.08. We have 24 million shares. You're going into 38 million. So right now, you just have a test of that high, and we have dramatically lighter volume. So it's going to be a whole price deal coming into the close today. You don't close over that level. Guess what? You can go right back downtown, and that'll be very quick. We go take a look at the IWM, the small caps. We have with the small caps out here. Small caps have volume. 22 million shares, so that's decent, no doubt. They're going into, however, they're going into 54 million. But they're over the high that was generated out here Monday, which is the 123.55. So that's saying that it can go up into where we started the downdraft from on the 8th of September. One of the targets want us to look at GDXJ, excuse me, folks. GDXJ is the Market Vectors Junior Gold Miners Trust. That is up $3 right now, $47.50. Good price movement, but it's going to need some juice, meaning it needs a lot more volume, because this is deviant here. I mean, in a big way, too, folks. And what it is this. When we came down on, let's see, on the 24th of August, you came down with 30 million shares. We go topside again, doesn't take a swing point out, because topside with 33 million. We come back down with 37 million, and right now you have 13 million. You know, so bottom line is that is not a market that wants higher price. You know, so we'll see how this shakes out. The number to keep your eye on this GDXJ would be $47.40. We're over it right now. You close over it, you can go to the top of the swing point. You don't close over it, that would be saying you're going to be selling off from that point coming downtown, which is pretty amazing. It's pretty amazing because of the point that the Fed is saying that they're still saying that they plan on going up before the end of the year, but we've heard that a million times. That's the other side of it. Wells Fargo, let's go to Wells Fargo. We take a look at Wells Fargo. So Wells Fargo, folks, is pounding its lower swing point, and you're pounding with volume on the daily. Now, what's going to happen here, which is going to be really wild, is that Wells Fargo is going to be pounding the lows on the weekly. So the low that we're talking about is the low of Brexit, the 27th of June. Because what had happened is that on the 24th, you had Brexit. The market went down. The 24th was a Friday, then went down Monday, and then it made a low on Tuesday. That low is a daily low, is a weekly low. We came down to that level. The first time we came down was last week, and we did with 61 million shares. That 61 million was going into 35 as well as 46. Now, it never reached the bottom of the price. What do? You do a bounce. Bounce wasn't bad. You had a bounce yesterday with 51 million. Well, guess what? Now you're doing 57 million into that same area. Now, that's on the daily. What ends up happening is that when we put this on the weekly, what you're going to see is that we're at Wednesday, and what you're going to have is that you are pounding into the lows with big volume. Last week we did 252 million. The 252 million is going against the low of 142 million. And now this week we've already done 142. So that baby also can get up to 200 million. That is an indication. If I bring this back longer, I'll put this back 3 years. And what you're going to see, I'll bring it back 5 years actually. What you're going to see here is that this is building cause to break down. You know, Wells Fargo's off the high of 58. You're at 45, which is not the end of the world for what they basically did. But this is not over. You know, when you put this, in fact, let's put this on a monthly. Because I put this on a monthly, you're gonna, yeah, on a monthly it's a disaster. See, on a monthly, we've already done 506 million shares versus 473 at one low versus 460. So this month, you're pounding into that area with heavier volume, and that's saying that good old Wells Fargo can trade down to $36. So big numbers. Big numbers, big selling, all of the above. And on the Wells Fargo deal, too, you got to love this. So Warren Buffett comes out today. Warren Buffett is the largest owner of Wells Fargo, but what he also wants to do, he's asking for permission right now from the regulators. This was prior to Wells Fargo, basically, opening 2 million accounts and firing 5,000 people. He was asking to get a bigger position in the bank. So Warren Buffett, the biggest investor in Wells Fargo, said that it'll be more than a month before he publicly discusses the bank phantom account scandal. If I start commenting on that or anyone else, it will lead down to too many pats. So I will wait until November to speak about it. The election or any other subject, Buffett said at Fox News Business, according to an article on the website. Yeah, sure. Bottom line, folks, he's running, which he should be running. Wells Fargo is a sensitive topic for the billionaire who controls 10% stake in the San Francisco lender and is seeking Federal Reserve approval to increase his holdings. Bottom line is that, we'll see what the inside scoop is of, I can't picture them letting him increase his holdings at this particular point. But you know what? We'll find out. Let's go over and take a look at some of the higher volume stocks. And this market still is going to be a lower volume market. We have Procter & Gamble down 89 cents. You have Micron Tech up 73. Freeport-McMoran's up 54. You got Microsoft up 92. Microsoft, folks, is buying back an additional $40 billion in stock. They were buying $40 billion. They're going to buy an additional $40 billion. You stay right there, folks. This is Tom O'Brien. This is TFNN. Coming right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. We get the Dow up 150. The NASDAQ is up 52. S&Ps are up 23. Bottom line is that we might as well go over the Qs. I mean, the NQs first. So the NQs up and over these highs. We're at 48.49. The highs that the NQs have been trying to take out since August of 48.27. The high that was just, so you're over them, and you're over them pretty good. Well, you're actually over them 7 points right now, but the further that you do get over them, if we get a close like that, the higher the probability that these babies can keep going. That's the NQs. We go take a look at the S&Ps. S&Ps have a long way to go, but guess what? The S&Ps do have wide price spread out here. We are at up 23 bucks right now, and you're going. It's going after the highs that were generated on the 12th, which is 21.56. You're into the downdraft, but it's a good move. It's no doubt. If we go take a look at the SPYs, you take a look at the SPYs. What you have at the SPYs is the SPYs of $2.35. You're 215.79, and the 215.73 is the number you want to keep your eye on. Right now, we're 90 million shares. That's 145 million. What I do expect you, more than likely what you're going to see in here, though, is that you will see some volume come in at the close. That's what we should see. You know, bottom line is that these prices are going to stay up. Volume should come in. Right now, you're at 627 million on the NYSE. On the NASDAQ Composite, we are at... The composite's at 1.6, so the composite more than likely will come in at about 2 billion, maybe 2.8 billion. And if you get that, then that's a decent indication that you can get higher prices out here. The composite right now is at 52.94. You're at 52.87. So the composite is coming. Let's see, the 7th of September. 7th of September, we did, it should do more than that, 1.878 billion. That's what we did on the 7th of September. So we'll see whether it can get up and over that level. But with 15 minutes left and the type of volatility you got, it should be able to do that number. Small caps. We go take a look at the small caps out here. Well, actually, let's go look at Federal Express first. Federal Express come out with numbers. Bottom line, market liked the numbers. Federal Express is up $11.46, trading at 174, and it has juice behind the move too. You're taking out a couple swing points. You're taking them out with volume. So Federal Express has a shot to get up into this, the highs of 185. The thing that's amazing that you have Federal Express moving like that, but yet UPS just can't handle the price at this point. UPS has a swing high at 110, and it hasn't been able to make 110 yet. You know, it's up $1.30, which is not bad, but it's surprising that it can't get up into that level. So I didn't read the news on FedEx yet, but more than likely, I suspect they have some kind of a separate deal going. Let's see. So FedEx got to remind that when it comes to guidance shareholders, more information is always better than less. Shares of the package delivery shot up on late trading on Tuesday after continuing to rise Wednesday after FedEx reported better than expected quarterly results and finally pulled the curtain back on how the integration of its $4.9 billion purchase of TNT Express is going. It wasn't so much what Federal Express revealed about TNT, though it did have some good things to say, but the mere fact that the $46 billion company said anything after stonewalling most questions about the deal on its last earnings call came as a relief to investors. TNT wasn't profitable when Federal Express agreed to acquire it. Investors, ever despising uncertainty, seem to fear the worst. The reality isn't perfect, but it's not dire either. And in the meantime, Federal Express's core business is picking up slack. More on that later, as at the very least, investors know where things stand. Analysts were expecting the acquisition to be dilutive to Federal Express's earnings on a GAAP basis, but now we know the extent of it, including integration and amortization expenses related to TNT. The company expects earnings per share of $10.85 to $11.35 for the fiscal year beginning in June. That falls well short of the $11.67 midpoint estimated by Barclays. On the bright side, Federal Express said its restructuring efforts have already started to lower costs at TNT and that there hasn't been any major surprises yet as far as integration expenses. The company's expected $700 to $800 million of cost. The company is expecting $700 to $800 million of cost during the 4-year integration process, but is also targeting $750 million in annual savings. Bottom line is that FedEx got some juice underneath it, and if we take this and we put this on a weekly, you're going to see it on a weekly too. Yeah, this thing was going to go for its highs. The highs that we're talking about here is 185. 877-927-6648. Dow right now is up $1.75. You get the NASDAQ up 56. S&Ps are up 26. You take a look percentage-wise, this is what you have. You get the Dow up 0.9%. S&Ps are up 0.9. You get the NASDAQ up 0.1. You know, so you get some decent numbers out here. There's no two ways about that. The key, let's go to that. One of the keys out here, folks, no doubt, is the composite. Is the composite going to hang over this high and stay over this high? You know, because it's, yeah, right now it's a good 10 points over it. That's the bottom line. 10 points. That's a good price spread over it. The Qs right now are 118.28. They got a little more to go. They're 13 cents over the high. That's not bad, but what they should get with 11 minutes left in the marketplace, there's no reason that they can't hang up to that level, because what you will get is that there'll be plenty of folks making decisions coming into this close out here. Decisions got to be made is that, okay, do I want to go longer? When you get a breakout like this, okay, the real kicker is that you have inside the NDX, it'll be like, okay, are we going to close shots if you're short inside the NDX? Are you going to go long? Those decisions are being made out here right now, and that's why the next 10 minutes is going to be pretty wild in this market. Let's go take a look at Randgold Resources. So you get the gold stocks moving. Randgold right now is up almost 4%, 468. Now, this equity's down from $1.26. You're at $1.102. And Randgold, you know, it's a nice bounce, there's no doubt, but Randgold also needs more volume. I suspect we will go after this 104.27 tomorrow. Right now you're at 102.56, and we'll see whether it can do it. You know, you got 770 million shares, no, 774,000, but you're going into 1.3 million. If we go take a look at Anico Eagle, which also is getting some good juice in it, Anico Eagle right now is up 374. This has some juice behind it. You know, this has some juice behind it. 56.24, you're at 56.02. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials right now are up 172. You get the Nasdaq up 57. S&Ps are up 25. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow right now is up 167. We get the Nasdaq up 55. S&Ps are up 25. Some of the Dow stocks out here, you have Caterpillar up $1.75. Boeing's up $2.82. DuPont's up 48. We have Big Blue is up $1.13. Let's go over to Big Blue and see what's happening with IBM. IBM, interesting. Okay, so you get 2 million shares. You're down off the high of 164. No big deal with IBM. Boeing, what you do have with Boeing looks like it's a dead cat bounce. Boeing has been in a consolidation for quite a while. The top of the consolidation in Boeing is 139, right? We're at 130. GE, we take a look at General Electric, and, oh, this is interesting. So General Electric can't get out of its own way. This is pretty wild, actually. So General Electric has been going after the swing low from the 27th of August and continues. Microsoft, just the opposite. So Microsoft at the highs, actually last night, Microsoft was actually over its highs after it had announced that it's going to do an additional $40 billion buyback, and it raised its dividend. The last high for the last 6 months is $58.50. And, yeah, Microsoft's still at these highs. And let's go over to Amazon. We'll take a look at Amazon. Amazon right now trading at $790.16. And I think the high is $790.79, right? Yeah, it is. That high was generated on September 7th. We go take a look at Google. What do you have with Google? Google is at 776. That high for the year is at, let's see what we got. 789. 789 is the high of the year inside that. Intel, let's go take a look at Intel. So Intel, let's see, INTC. Intel broke topside last week. You know, it's not challenging its high right now. It's at its highs, though. What you do have with Intel is this. When you take a look at Intel, if we bring Intel all the way back, and this is going to get pretty wild watching how this shakes out with Intel. Intel has been trying to break out of this area since January of 2002. That's how wild this thing is. And, you know, at this particular point, it's even the last time it was up here was in December of 2014. And we'll see where this shakes out at the end of the month. This is a monthly that you're looking at if you happen to watch on Tiger TV right now. And we'll see whether it holds. Because if it doesn't hold again, you can see that on this continual basis, they try to break out, they go back downtown. And it's pretty amazing that you can come into a supply line, and you come into that supply line 16 years later. And on Intel's case, that supply line is still hanging there, and you still have people that are still trying to get out. Because the high of Intel, folks, is $75. You know, when it crashed in 2000, when the market crashed, the Nasdaq crashed, it went from $76 down to $41 in 1 month. 3 months later, it was down to $22. You know, so there's a huge amount of folks that have been holding that for that particular time, because that would have been from December of 1999 over to November of 2000. So big numbers, no doubt. You stay right there, folks. We're going to be coming back. We get some numbers coming out after the close. Dow Industrials right now up 170. Nasdaq's up 55. S&Ps are up 25. Gold contract up $19.70. You get silver up 64 cents. You stay right there, folks. We'll be coming right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Seam in Dallas.
Hi, Tom. I love your show.
Thank you so much.
I've been listening to you since 2001 from my Seattle days when you were on a little station there.
I appreciate you growling and prowling with us out here, man. Thank you. Well, listen, thanks for bringing us from Seattle to Dallas, man. Appreciate it.
Yeah. I love all the hosts. I love your show. I'm addicted to it.
It's Hotel California. It's wicked, isn't it, man? Thanks.
All right, Tom. Nice to talk to you.
Have a great one. Have a safe one.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Always do your best. Take action on your ideas. Doing your best means to take action. You can have many great ideas in your head, but without taking action upon that idea, there'll be no manifestation, no results, and no reward. Market-wise, let's take a look at it out here. We have the Dow Industrials up 163, Nasdaq up 53, S&P's up 25, gold contract up $18.60, trading at $1,336 an ounce. Silver up 62 cents at $19.90 an ounce. Platinum up 24 bucks, $1,053 an ounce. Light sweet crude up $1.49, trading at a price point of $45.54. Bonds, the 10-year note up 6 ticks, 130.22. 30-year bond up 28 ticks, 166.28. King dollar down 471 ticks, 95.50. The euro is trading at $1.11, and the yen is at 100.53. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so you're $215.78. Bottom line, you are over the swing that was established last week. That swing was at $215.73. You do have much lighter volume. We did 107 million, even with the highly volatile day out here. We'll see how the SPY can handle how it came down. When it came down on the 9th of September, that's when we went from a price point of $217 to $213, and you had done 221 million. So that's the run. I suspect it's going to try to get into tomorrow. We'll find out whether it can do it, or that's where the failure is going to come. NDX 100. Now, Q's up and over their highs. The Q's closed at $118.15. The high, $118.12. Bottom line, that means the Qs can go to higher price. Volume also is light on the Qs. So we did 30 million shares last time that were up here, which is 39 million. The small caps, we take a look at the small caps. What we have with the small caps did 29 million. You're up $1.80. You $123. It's trading at. You're going into 54 million. That being said, the small cap, the IWM, looks like it's going to go test the $124.31. Gold contract. What do we have with gold? Gold contract. Since last night, we had highly volatile day. Bottom line, you get wide price spread. You have the volume in this move also. We're up $18.50. You've done 250,000 contracts. And we'll see if, in fact, it's going to make that run for 13.57. Right now, it's set up that it should make the run. Bottom line is that what you did have happen last week is that when we went to the 1332, it gave it up. Now, we closed over the 1332, which was the high of the 15th. When you close over that, that says, hey, guess what? This will make that run up there into the 1357. XAU, the HUI, what you have with the XAU and the HUI, XAU closed up $6.77. That's saying that can make the run. We're at 99.20. That's saying it can make the run up to the $101 level. The Gold Bugs Index, same type of setup. We'll get the volumes on these tonight, but the Gold Bugs Index was up $18. That is saying that you also can get that run up to the last swing high out here, which was 250.91. Bonds. Now, this is where it's going to get really wild. So the notes and the bonds, folks, are still saying they want lower price. Bottom line, what we had out here today is that the 10-year note got down to 130.02, closed out at 130.22. Bottom line, that's, you're up 6 ticks. That's a sideways move. It's a sideways move in the market after it broke down under the 130.21. So you just made it inside the higher range by 1 tick. We'll see whether it can hang there. 30-year, we take a look at the 30-year, same setup inside the 30-year. 30-year hasn't made it inside the higher range. The 30-year has quite a way to go to do that. 30-year did reject lower price. That's at 164.13. The last swing low out here was 164.17, and it did have lighter volume. We did 259,000 contracts versus the 314. So it's like, okay, the 30-year is going to make a run into this 160. That's interesting, yeah. 168.03. It can make the run there. That's where we came down with 345,000 contracts. King dollar. Now, here's divergence. And what we had is this. So the Federal Reserve came out with their numbers, folks. Bottom line with their statement. Their statement was that they're going to wait a little bit longer. That being said, they said that they still see a rate hike before the end of the year, which I don't see it happen in December. It's not even close. They've called wolf a million times, but, we'll see where that shakes out. inside the federal funds rate, that the probability is still 60% that it's going to go up on December 21st. That being said, the dollar, this is intriguing, okay? So the dollar has done 29,000 contracts. We're at 95.51. That is pushing the last swing point, which is 96.21, because we got to 96.30 with volume. When you push a high or low with volume, you go right back to that level again, test it once again. So I suspect what you're going to see is that we're going to see the dollar test that level, and I can expect that test is going to take place sooner rather than later. If you take a look at it intraday, what you're going to see is that the market in Japan, as well as our own market, had this dollar going up and down. Now, last night in Japan, as their central bank came out with, basically trying to put juice into the Nikkei, trying to make the yen weaker, which they didn't do, by the way. They tried, but they didn't do. It worked for about 35 minutes. That's when the dollar got up to the $96.30, then sold off all day. When the Fed came out with their announcement at 2 o'clock, the dollar got to a low of 95.32, and at that point, it did reject that lower price. Silver, let's go take a look at the silver market. We have with silver had the wide price spread, had some juice behind the move also. Silver did 85,000 contracts. You're trading at a price point of $19.80, and your swing high out here that it's going to go after is $20.23. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials closed up 163. You had the NASDAQ up 53. S&Ps are up 25. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finish up 163. The Nasdaq up 53. S&Ps are up by 25. And inside the Fed language here, folks, bottom line is that what you had, let me just get this for you. So you had the aspect that, come on, baby. That they felt that they wanted to wait longer for the aspect for more information coming in the marketplace, and they still felt that they could go up before the end of the year. That's how this shakes and bakes. Bottom line is that when you take a look at the marketplace, there's only 2 more Fed meetings, folks. You have a meeting on November 2nd, and bottom line is that they need more data. Thank you, Terry. November 2nd, they have a meeting, and there's no way, I suspect, they're going to go up right before the election. That has a 21% chance of going up. December 14th, however, does have a 59% chance. And if you remember last year, it was one and done last year, and that was in December. So I suspect more than likely that's what we'll see. Let's go over to Bed Bath & Beyond. Bed Bath & Beyond just come out with numbers. That closed at $43.11. Let's see what they have to say. So Bed Bath & Beyond, the net sales was $2.99 billion. The estimate had been for $3 billion. They come in with $2.99. The earnings per share, the estimate was $1.16. They come in at $1.11. And Bed Bath & Beyond is really trading almost flat. It closed at $43.11. It's trading at $42.50. So that's trading at the lower end of its range. Bottom line is that this is an equity that already got hit. Bed Bath & Beyond, at the beginning of the year, was at $79, and right now you're at $43. Let's see. RHT. You got Red Hat. Red Hat closed at $77.04. Let's see what they have to say number-wise. So Red Hat had revenue of $600 million. Their margin, what a margin this is. Man, this is pretty amazing. Their margin, what a gross margin, man, 86.7%. Imagine you're in a business that you take in gross margin 86 cents out of every dollar you take in. That's pretty intense. The subscription revenue is $532 million. The estimate was $225. The third. For the year, they see them making $223 to $225. They see third quarter revenue coming in much higher also. So it's going to be interesting taking a look at this. Third quarter, the estimate for third quarter revenue was $611 million. They see $613 to $623. Now, that's pretty intense when you actually go over the estimate, and even the lower end of that is over it and that's by quite a bit. So Red Hat right now, it closed at $77.04. It's trading at $82.34. And this is an equity that had got killed anyway. This is amazing, actually. So this got killed June 22nd. This is Brexit, I guess. Okay, so Brexit, it goes from $81 down to $70. And now this is going to, I think it's good. Let me just look at this for a second. Yeah, it's $82, so it's up $5. And we take this. So you're going right back to the top of the range again. The range on this Yeah, this has been consolidating. This at the top of this range out here is $84. So you can expect you're going to go right back to the top of that range. We take a look at Amazon. Now, Amazon's been at highs, folks, and pushing highs. Let's see. So the high, $789.74, and right now $790.79 is the high. So I expect Amazon's going to probably go for that high tomorrow. Inside the commodity complex out here today, you had some action, no doubt. We had crude oil was up 3.4%. Silver was up 3.1%. Gasoline was up 3%. You had nickel up 1.5%. Gold was up 1.4%. Natural gas was up 0.9. The commodities that were down, you had orange juice down 2.3%. Lean hogs were off 1.6%. Soybeans were down 1.4%. The euro, and the correlation inside this euro, even tonight, and the dollar and the yen are going to be a big deal just even overnight here. So the euro today got down to 111.23, had a sideways move from then. The yen last night in Japan, you talk about high volatility, we had it all. The yen had traded to a high of $102.79. Closed out our trading here at 100.46. That being said, the Nikkei got some juice behind it. The Nikkei last night went up 315 points to 16,807. What's intriguing there is that normally when the yen gets weaker, you see the Nikkei go up. So we'll see what shakes and bakes tonight inside this yen. But the Nikkei did have the wide price spread, had the volume behind the move. Nikkei saying it wants to run now up to the 17,156 mark. We go take a look at the SLV. So the SLV is the ETF for silver. That had 17 million shares traded. Bottom line is that looks like it's also going to go for the swing high that was generated out here on the 6th of September. That was $19.11. And we know, silver moves, man, when it moves quick. Bottom line is that this is going to be a big number at the top out here, and this is why. The first time we hit it was on July 1st. We hit the night $18.93. He did it with 29 million. Last time we went up there, we did it with 15 million. Today, he did 17. Bottom line is that what you want to see is you want to see that get into that level with more than the 15 million. We did 17 today, but bottom line is if it gets that follow through, then there's some real action. Silver stocks just didn't move as much as the actual metal did move out here. The volume characteristics inside this market, this is what you had. You had the Dow Industrials do 898 million. Not bad, but not a huge amount. The NASDAQ Composite did 1.9 billion, and the composite itself, I believe, she got over by about 7 points. So the last high, the high period is 5,287. Right now, we're at a high. We're at 5,295. JBL, I think that's JBL, right? So JBL Circuit closed at $23.73. That is trading at where is she? That's trading at 23.41. You stay right there, folks. I'm in. Mr. Chris Gaffney's coming back. We're so lucky to have him, especially on these Fed days, from Everbank. You can check out the Everbank banner right on the front page of TFNN. We're coming right back, folks.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new market-safe focused commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got to love it. We have Fed Day. We have our man, Mr. Chris Gaffney. Chris, folks, is the president of Everbank World Markets. You can come over to our website at TFNN. You're going to see the Everbank banner on the right-hand side. And as you pull that banner up, folks, I'm sure you've heard Chris many times. We're always lucky enough to get him on Fed Day. What you're going to see is you're going to see 6 commodities, 1 CD with no risk about it. And what this is all about, this is a commodity-based CD. We're talking about 6 commodities inside of 1 CD, and the commodities that we're talking about are gold, silver, copper, nickel, soybeans, and sugar. Bottom line, we're going to talk with Chris about it. The funding deadline for this, folks, is October 13th. This is a 100% protection of your principal, which is pretty amazing. Chris Gaffney, welcome back to TFNN.
Thanks, Tom. It's always a pleasure to be with you.
I'll tell you, when last week when we were asking your staff if you could be on, I was saying, oh my God, Fed Day is here again, and here comes the crying wolf that we're going to go up on rates, but guess what? We're not.
I titled my piece that came out right after Deja Vu all over again. I mean, we've been here, we've done this, and I think the most interesting thing about the entire day it has been with both the Bank of Japan and with our own Fed.
Yes.
Basically, they have admitted that they really don't know what's going on. Nothing's fitting their models, and I think both have just kind of thrown up their hands and said, I think it's best to do nothing. And we're just going to kind of stay on the same path we've been on and hope that it starts working.
And, of course, in Japan's case, it hasn't worked for 20 years, right? What's amazing is that we all say, and we've been in the market for a long period of time, but you hear many times, well, this hasn't happened before. But truly, this hasn't happened before. We haven't been at low rates for 7 or 8 years and negative rates across the world, right?
Right, and nobody knows. There's no exit plan. There's no. History to look at and say, oh, well, this is how this is going to end. Nobody knows how it's going to end. And again, I think ultimately it speaks to the precious metals and a little bit of commodity exposure and being diversified. I think that's going to be the key for investors, is to have that asset class diversification, because you really don't know where this is going to end. And I'm not one that is a doomsday guy that thinks everything's going to fall apart, but I'm sure glad I have a little bit of exposure to both precious metals and commodities in my portfolio.
And what we're talking about, folks, the common sense approach, would be, if you come over to our website at TFNN, what you're going to see is that you're going to see it's a 5-year market-safe focused commodity CD. And the bottom line is that when you can't lose your principal, but you can make money in the aspect of where commodities may go, can go, all of the above, in this type of an environment, it's pretty cool. So can you tell us a little bit about how this works?
Sure. It's based off of the commodities that you mentioned at the top of the show.
Yes.
Gold, silver, copper, nickel, soybeans, and sugar. So you've got 2 precious metals, you've got 2 industrial metals, and you've got 2 what we call softs.
Yes.
And what we're going to do is we're going to measure the price of those commodities, those 6 commodities, at the beginning of the CD, the initial pricing date, and then we're going to measure them each year during the 5-year period. We're going to calculate the average return of those 6 commodities over that 5-year period. It's going to have a cap of 50%. And then we're going to pay CD holders their principal plus the upside of those commodities up to the cap of 50% over the 5 years.
Right. And what's so cool here, folks, is this. So picture that the commodity market is very volatile, folks, but this is a way that you can get in the commodity market, that you actually get a pricing structure once a year, because these will be priced out once a year. Correct, Chris?
Correct. So it's not exactly a point-to-point. So, as you point out, they're volatile, and sometimes, if you miss out on that upside and it comes back down, you've missed out. You've given back all your returns.
Sure.
But here, because it's over 5 years, because it's a longer time period, and because it's that averaging, you're going to smooth out some of that volatility.
It's an FDIC insured product. It's IRA eligible. What happens, folks, it's a minimum of $1,500 to open the account. Bottom line, though, you can open whether you picture like $100,000, $50,000, whatever you feel is great for you, and if you were getting, let's say you're getting a regular 5-year CD, your only downside, folks, would be what you could be guaranteed on a 5-year CD versus what market you may get on a type of CD like this, which is pretty amazing.
Right. We call that opportunity cost.
Thank
and with
you.
the low rates where we are now, your opportunity cost is near historic lows as far as what you're giving up in order to get the potential return of this CD. And,
Sure.
and again, a key that you pointed out, it's IRA eligible. What a great way to add what is traditionally a pretty volatile asset class to an IRA with principal protection. And again, guaranteed return of that principal. So I think that's it's a perfect investment opportunity for that type of scenario.
And you know what's amazing is that, and Chris, folks, I was talking about this yesterday. They keep claiming that inflation's not out there, but guess what? If you go buy food and you're on the outside of the aisles, not in the inside, if you're buying health insurance, if you're buying education, right. We're talking about big money inflation and not small money. So it's like, okay, it might take us that, listen, we're in it. I'm not quite sure what those figures are in the government that they can keep saying that we're at 1.2 or 1.3%, but it's like, I don't know, it seems to me that prices are going up.
Right, and you look where we're starting from, too, on the commodities. We've been in a 5-year bear market for commodities, and last year was just really got, the commodities got pretty hammered last year. And so you're starting from a point, the first half of the year looked pretty good on commodities. In fact, the precious metals were the best performing asset class. But we've got commodities that are starting off from a lower base, so
Yes.
there's good opportunity there. Prices are down right now because of some big supplies on the ag side, on the soft side. But at the same time, we think you're going to see increased demand on those as the food changes and as the eating habits of especially the new middle class in China and India change.
Yeah,
So,
all those people, no doubt. So, folks, you can give them a call. Their phone number is 855-750-4051. You can come over to our website at TFNN. You're going to see the banner. To go over it, it's $1,500. That's the minimum to open the account. 100% protection of your deposited principal, FDIC insured, IRA eligible, all of the above. You can earn up to 50% upside potential at maturity for each of those commodities. Chris, you have a great one, a safe one, and before we know it, it's going to be Fed Day again, man.
I know, yeah. We'll wait and see if they pull through with their promised rate increase next time.
No doubt. Have a great one, Chris. Have a safe one. Look forward to speaking to you again.
Thanks, Tom.
Thank you. You stay right there, folks. This is Tom O'Brien. This is TFNN. We're going to be coming right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. And, one of the Tigers in the den, he's talking about NFL ratings are down. Drop your advertising for Monday Night Football. Buy debate ads. I'll tell you, man, they could charge for this debate and then make a fortune. And it's pretty wild because I was just going to bring this up and the aspect of, if you take a look at CBS, folks, CBS has just gone from a price point of $58 down to $50. It broke lows. It's breaking up with volume. And now check this out. This is pretty intense. Elections, bottom line, bring in huge amounts of money for stations. Well, guess what? This election is not doing it. Clinton is spending a fortune, but Trump is not, and it's hitting all over the place. And in fact, there's a story that was just out in Bloomberg. Let me see if I can get this for you. That the aspect of TV right now is not working as it has been working in the past. This guy just put a story out factually that how much it's costing per point in order to basically to move the campaign per point. Let me just get this for you 1 second. Because it's pretty intense, the amount of money that it takes, and I'll get it at the break. Bottom line, though, just to cut to the chase and give you some kind of an idea, Clinton to move a point is paying about $160,000 to move a point in the polls. Trump is paying about $50,000 to $60,000 to move a point. And then Johnson is paying $4,000 to move a point. So it's pretty amazing that in that context of what TV is actually bringing, and there's no doubt that Trump has changed the landscape of campaigns and where the money's being spent, and you can see that in CBS in Viacom, because Viacom themselves, they're looking for a new CEO. And what is happening is that they're not only going to look for a new CEO, but they're also going to be out there raising money. And that's one of the reasons that the equity itself is down. Some of the higher volume stocks out here today, and we did have a low volume market. You had Bank of America up 5 cents. Wells Fargo is down 73. Now, if we go over to Wells Fargo did come down with volume. This is banging the bottom, has the volume behind the move. And, we'll see whether it can break down. It looks like it's going to make that run for the low. There's a low out there. The low that is out there is $44.50. You're at $45.83. So we'll see if that does shake up. What's wild? Hey, so check this out. This was now this is deviant, right? But last week. I was listening. Was it CBS? No, I forget what media outlet it was. But this is so. Check this out. This is how deviant the press, the stations can get. So we're coming out. They're coming out with so many different polls, right? So picture that you're a station. You're coming out with so many different polls. They know that they're not getting the amount of money that they need. Definitely off Trump. And then off Clinton, I suspect it is, they know how much gets raised, and they say, okay, I want so much money that, you've just raised $100 million, you only spent $20 million on TV, where's that other $80 million? So a nice deviant way to get both of them going on a continual basis is you do these different polls. And what seems to be happening this year is that they're doing different polls, and the different polls have different formulas inside them, whether it's, the white guy that's 50, whether it's the young kid, whether it's the millennium, whether it's a veteran, whether it's all this or that. And I can totally understand, what they're trying to do here. And I suspect what they're trying to do, it's not even a manipulation of where the candidates are, who they want you to vote for. What it is that they see the money being raised, they see the money not being spent, then they say, hey, we need a poll. We got to get a poll out here that if one's winning, then we're going to need a pool that the other one say that's going to win there. That one's winning, we got to say another one's winning there. So on a continual basis, right? Imagine if you're in that spot. You're in that spot, you wake up in the morning, and you think you're up a few points. And all of a sudden they're saying, well, no, you're not up a few points. And you say, what do you mean not up a few points? Because all of us, I think, we're listening to poll numbers, and, well, do we know what the poll was about? What does that do? That brings more buys into the marketplace, So they're in a very unique situation as they come into, this election. There's no two ways about that. What we will see, no doubt, is that I expect that the debate is going to, it's definitely going to break the NFL numbers. Bottom line is that the debate itself may be, they probably should have did a pay-for-TV debate because they would have got it. There's no doubt about that. 877-927-6648. So let's go overseas. Let's go, actually, we went to the Nikkei. Let's go over to Hong Kong. We take a look at Hong Kong. Hong Kong last night was up $139. You're at 23,669. And, yeah, that's a high volume spike. So that wants to go hit the high up there at 23,000. 24,363. UK, we go take a look at the UK. Oh, actually, no, I want to go look at Shanghai. So, Shanghai last night, look at that. Shanghai is still having a big problem. Shanghai, can't get out of its way. Shanghai was up, went a sideways move last night. Up 2%. Shanghai just doesn't want to do it. Shanghai had gapped down last week and is having a tough time with that gap. The UK, we go take a look at the FTSE 100 in the UK. That also couldn't hold price today. So this is going to be, the FTSE, yeah. I suspect with the type of move that we have, the FTSE should be able to at least test the highs out here of 6,900. But the way it traded out here today, it doesn't look like it's going to. The DAX in Germany, we take a look at the DAX in Germany. What we have with the DAX in Germany, the DAX in Germany's trading at, that was up $42. All that did out here today is filled the gap from the gap down on the 12th. Did it with lighter volume, and DAX says that wants to go lower too. So what I do expect you're going to see overnight here, this volatility is going to continue overnight. Many times what does happen is that when you get the Fed move like this, you get the move up and you get a reversal the next day. So the way right where we are right now is going to be crucial because the NASDAQ has to get away from these highs. The NASDAQ right now, it's away from it pretty good. It's away from it 9 points. But until you get away from that, maybe like another 10 points, then you're not away from it. Right now, the high of the NASDAQ is 52.87. We're at 52.95 right now. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials finished up 163. NASDAQ up 53. S&P's up 25. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. And of course, folks, don't forget, we have Mr. Chris Gaffney on. If you're in the CD market, check out this 5-year market safe focus commodity CD. You can check it out right in the front page of TFNN. The commodities that we're talking about is gold, silver, copper, nickel, soybeans, and sugar. It is 100% protected. Your principal is 100% protected. It's FDIC insured, IRA eligible. Their phone number is 855-750-4051. So you get the upside potential, folks, and bottom line, your principal is 100% protected. Pretty amazing. Amazon. Let's go to Amazon. This is amazing, folks. So Amazon today, and it was intraday they come out with it. They introduced a new photo printing service. Well, what does it do? Shutterfly just got destroyed. Amazon is destroying company by company, folks. It's pretty amazing. If you go over and we take a look at Shutterfly, what you're going to see is this. Amazon come out with the announcement at 20 minutes of 3 this afternoon. Shutterfly had been trading at $50.87. It's down at $44.20. Bottom line is that this business, they're getting in their business. This website, Shutterfly, they offer photo-related products and services. Guess what? Amazon, this is how this goes. Amazon is adding this to their Prime membership. So if you're a Prime member, you're going to have free photo storage. Free, okay, which is pretty amazing. The photos, if you don't have Prime, bottom line is that they're going to be 9 cents each. The photo books start at $20. Cards, calendars, all of the above. Shutterfly, had good revenue. They're talking about a $1.15 billion in revenue, and this is where, man, that guy Bezos, man, is just so smart. It's scary. It's not scary, but it's pretty incredible. So in 5 years, Shutterfly brought revenue from $640 million to $1.2 to $1.3 billion. Can you imagine, what Amazon's going to do with this? Right off the bat. Amazon's not going to stop, folks. Any business Shutterfly, that's a simple business. I mean, that is a very simple business. Amazon already has the list. They have the list. They have the Prime members. It adds another deal into Prime membership. And bottom line is that at $99 a year, I think that's what I'm not sure whether I'm paying $99 or $89 with a one-click deal. it has it all. And I've never used Shutterfly, but guess what? I probably will start using it. Maybe I might, maybe I won't. But bottom line is that they are going to basically destroy their business model. Now, Shutterfly is a big problem because in their aspect, that is, they don't have a lot of different things out here. So you can see what Amazon does. More than likely, Bezos has a whole section saying, okay, show me where you have growth, number one, and they grew from 645 million to 1.5 billion, 1.1 billion in 5 years. Show me where you have growth. Show me where we're talking about storage. Now, this is the amazing part. And I wonder, you got to remember something, that Amazon has the storage business also. So picture, you have the storage business. You know how much business is coming in. You know what the growth is, right? And you know that if it's an internet-based business, guess what? Amazon owns it, okay? So the amount of information that Amazon has is frightening, actually. It was just like years ago that you didn't want to be in a business that Microsoft had to be in. You absolutely don't want to be in a business that Amazon can replicate, because Amazon plans on replicating every business in the world. I suspect the more that this does happen, I suspect that the regulators are going to come after them at some point, because they can't destroy every business, I guess that's what it comes down to. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night. Have a safe night. Look forward to speaking to you right here, 8 o'clock tomorrow morning. Wow! Go get them, folks.